Eric Nuttall, he manages the firm's energy fund and says the twilight of U.S. shale may be upon us. He'll join us now to talk about that and maybe these sanctions, which are confusing, Eric. But let's start with Scott Sheffield's comments, because Scott sold his company to ExxonMobil. He used the word inventory. That's a fancy word for oil. He basically said some of the best oil is going to be drained. And I'm using the there will be blood voice in just a couple of years. Those comments caught your ears and mine.
Absolutely. That interview that you held was unbelievably important for the energy market because it's bringing something that many of us have spoken about more to the forefront. And that is U.S. shale very clearly is in its twilight. And by that, I mean the best days are behind us. And it's especially important now to believe in what you see rather than what you hear, i.e., we hear every day about from your president, Donald Trump, about U.S. energy independence and drill, baby, drill. Yet when we look at 2024, shale grew at its slowest pace since its inception. That was at an oil price of $75. And so your energy secretary, Chris Wright, was down at Houston at CERAWeek this week talking about how shale is going to magically grow somehow down to 50. And so we just don't see it. What we think is the era of meaningful growth is behind us. And why that is so unbelievably important is that over the past 10 years, non-OPEC production has grown by 5 million barrels per day. U.S. shale over that same time frame, which is a component of that growth, grew by 6 million barrels per day. So were it not for the rise of U.S. shale, the world would have been in a very clear supply crisis. And that's where we're going with the twilight of U.S. shale.
Eric, are you Canadian-based, by the way?
I am. I'm based in Toronto.
Okay, because I got this.
How'd you guess?
It was the part when you said your president. And I thought, okay.
Yeah, not about.
Just to be clear, my question, though, is about the price of oil. So we've seen it falling considerably since Trump's election, and probably it's the only thing that hasn't round-tripped back to before Election Day. There's, it's still in the kind of mid to upper 60s. But if you're right and shale supply is running out and so forth, I mean, should we expect crude prices to be back on the rise again or no?
I think it's going to be a process. So there's a massive disconnect between what I view the fair value of oil to be and where we trade today. And I think the reason for that difference is horrendous sentiment. That's being driven by the mantra of drill, baby, drill, the market generally buying into it and believing that Trump can somehow force shale companies to drill at an oil price that is below their break even right now. Like we need an oil price $10 higher to get any semblance of any modicum of growth. And at the same time, there's this confusion about OPEC's spare capacity, this belief that they're sitting on 6 to 8 million barrels per day. And due to the loss of market share to the U.S., they want to come and crush the price. We think spare capacity is about 4 million barrels per day. When you look at the actual amount of production in February by OPEC members, over the next 18 months, we think the amount of oil to be returned is much less than consensus believes. RBC put out a good report showing that they think it's only 900,000 barrels per day over the next 18 months, and that's obviously at a very gradual pace. That roughly matches 1 year of demand growth. And so I look at a year from now, we think shale is maybe at its peak, maybe going to grow by 150,000 barrels per day. In a 105 million barrel per day market, it's a rounding error. We see countries like Canada, we're going to grow by roughly 95,000. Brazil's been disappointing. Guyana's later in the decade. And so it's a process of normalizing OPEC spare capacity for the next year to year and a half, at which point I think the world is going to wake up and realize that we have a real problem on our hands.